let's get the administration work basic. You were in the first Trump administration. Are you affiliated with the second Trump administration?
No. I do know the Treasury Secretary. I think is doing a great job, and you made a joke. He was perfect. That wasn't on any list. But my boss was Larry Kudlow. So Larry created a role for me in National Economic Council. That was Trump 1.0. So now I'm in the private sector.
Larry Kudlow and I are on the same page. This goes back to Wayne Angel, that nominal GDP really matters. Top line current GDP. Has this administration, with the chaos, whether Republican or Democrat, have they dampened the animal spirit? Have they dampened Kudlow's nominal GDP?
No, Tom. And I would argue that I'm going to give a counter narrative. And maybe it's that the chaos and confusion, which is the conventional wisdom, for now is actually not a bug of the system, but rather is a design so as to keep trading partners offside. If it continues, obviously, the full year, that's a problem. But I would say that what worries me much more on the uncertainty side is, what are we doing with tax policy? Because if we look at the uncertainty index, what we see is concerns about taxes are sky high. So we need the Congress to figure out, are these tax cuts getting extended? Are they not? Are there additional tax cuts? How might we pay for them? And that, to me, is a bigger concern for the economy and what it means for CapEx, ultimately growth, and then nominal activity.
Seems like every company conference call I listen to, every guest we have in here, and we have roughly 25 a day, don't cite tax policy.
We have how many guests?
They say the uncertainty, when you do 5 hours, you get a lot. The
25
uncertainty
guests
just
you have?
introduced into the system has simply been, we just don't know where the tariff policy is going to be. You tell us where the roadmap is. Companies will adjust. Tom likes to say that companies adjust. Investors will adjust. It just gives a little bit of a sense here. So we understand the chaos from a negotiating perspective. That's fine. That is a strategy. But boy, it seems like the market's really craving certainty around
it does.
Tariffs.
And I remember reading a book way back when by Michael Jensen, Harvard Business Review, and talked about the short-termism of U.S. corporate America. And maybe there's a little bit of that now where people want certainty. They're not going to get it. But also, CEOs tend to be pretty opportunistic, and you're buying a free option. So if anything goes wrong, and by the way, the economy, we could debate about the economic outlook. You could just blame whatever is convenient. So there's probably part of that. If you look at the small business side, that generates 40% of the jobs, their numbers look great. So I'm going to push back a little bit on that. Let's see how we go after April 2nd and what happens as we move toward June.
Are you modeling sub 2% real GDP? We weren't doing that pre-election, were we?
So here's the thing, Tom. I don't like the first quarter numbers. They're going to look soft. Because the expenditure
side... Which has happened before. To cut everybody some slack, that's not unusual.
But what's really bizarre is that if you look at like real income, at least through January, it's up almost 3%. So you have like the expenditure side from Atlanta Fed down about 2%. And you've got this huge increase on the real income side because job growth is still positive. I'm not sure how to square the circle. Right now, yes, it does look like GDP will be on the lower side than the higher side. You're supposed to mark your numbers down for the year, but having done this for a while, we also know that you could drive a truck through the first and last estimates of GDP.
Fair. But, you know, given trickle-down economics, where's the Gini coefficient of the United States? I mean, is this an administration governing with a presumed tax cut for the haves against half of America flat on their back?
Yeah, so this is where I would say that where the Tax Cuts and Jobs Act ticked you, which, by the way, President Trump wanted to call it the Cut Act. Ticked you. So I like the former more. But anyway, but if you look at the data through the pandemic, and Kevin Hassett, our current head of NEC, Larry's old job, had done some nice work on this as well. But if you look at the income by quintile, the mid to lower ends in relative terms did extraordinarily well under Trump 1.0. And in terms of real median income, was up about $6,000 in those first 3 years. And that was about 5 to 6 times what it had been in the prior 16 years with both Democrats and Republicans. So if the tax cuts, my opinion is the tax cuts are extended, you'll get that blue-collar boom that Larry, my old boss, talked about, and I'm optimistic we'll have good wage growth. But we'll see what happens. We need to get this done.
I mean, judging just from your sources, people you talk to, do you think that tax cut will be extended?
I do think it's extended. So one of the things I thought was interesting is when Speaker Johnson got that budget blueprint through, I thought that was a big deal because that told me we're going to get the CR. Right. So the fact we didn't shut the government, I think it was smart that Chuck Schumer kept the government open because that would have delayed things another several weeks. Depends is can we get a bill in place sometime maybe before June that it could be signed mid-year, that would make me more optimistic that we'll get good growth. If we're waiting, and I think, by the way, we'll get the tax bill done, but if it happens in December, I'm going to lower my GDP numbers.
Joe Lavorgna with us. Joseph Lavorgna, SMBC Nikko Securities, an extended conversation this morning. Good morning on your commute across the nation. Good morning, 99.1 FM in Washington, 92.9 FM in Boston. Of course, good morning on YouTube. Subscribe to Bloomberg Podcast. Just stunned at the results there. Good morning to all of you. Good evening, I should say, in the Pacific Rim. Paul?
Joe, from your perspective, what are the long-term gains that we may see in this economy for what may be some short-term pain? What are the long-term gains that you're looking for?
It's clear that we can't sustain 6% budget deficits to GDP ratios. And fortunately, whoever party in power always blames the other side for not being a fiscal hawk. But it seems like we certainly need to do something on the spending side. And what I've highlighted to clients is if you look over the years, the GAO has done some interesting work about how we do have a lot of waste, abuse, and fraud in the system. The Pentagon's paying $600 for a hammer. There are massive cost overruns for the F-35. By the way, any politician typically wants something done that can never be touched. It goes under procurement because we could always argue it's national defense, so that spending doesn't get touched. But GAO had said that anywhere from 100 to 300 billion we could get rid of per annum. Now, I've heard people think Elon Musk gave a higher number. I don't know if that could be the case, but at least the older stuff said, look, if it's 100 to 300 per year, over 10 years, it's 1 to 3 trillion. So that to me is meaningful, but we'll see. I'd like to, again, this comes back to the budget because I want things that are legislated, because if it's legislated, you can't undo it every 4 years.
Okay, but this administration has quieted the legislature, right? I mean,
say that again?
The legislature's out of play.
Well,
right now we got an executive branch and
why,
a judiciary chasing after them.
That's right, Tom, and that's why we kind of need to figure out, okay, we haven't really legislated a lot. We've done a lot of executive order.
Yeah.
That's why I'm relying may not be the right word, but I'm assuming that there's going to be something codified in law in the House.
Okay, totally. Lavorgna driving the market higher now. Futures up 70. Joe Lavorgna, this is totally unfair to you because you're not at 1600 Pennsylvania or those environs right now. You say we need a tax cut. Brilliant. Who listening or watching says we don't need a tax cut? The line is tariffs will pay for it? Good morning, Canada and Mexico.
Yeah.
Explain this.
Okay. So I'm making the assumption there will be some minimal level of tariff.
Fair.
And,
okay.
And I don't know what the numbers are going to be. Hopefully we'll know a little bit more April 2nd. My gut is that it will extend a little bit further than there. We'll get some clarity, but not everything we want. Again, I don't know what they're doing in terms of the tax cuts, the spending cuts, and I don't know what the tariffs will be. I mean, there's roughly $3 trillion of imports, so a 10% tariff, in theory, could raise $300 billion, at least in the early years. But I don't know what they're going to do with that. Is that going to? It's certainly not going to be legislated in all likelihood. But is there a tariff? What is it? How many spending cuts are actually implemented? And how does the economy perform?
Have you seen legit work on this from Yale Budget Lab or CBO or from
the
Dr.
CBO?
Hassett?
Well, let me say this. I don't like the CBO scoring because if you look at, they assume in the next, just to give you an idea, over a 10-year scoring period, the difference between, using their revenue numbers, a difference between a 3% economy and a 1.8% economy over a 10-year period is about 4.3 trillion of additional revenue. So this notion CBO is going along this current law versus baseline, to me, is a big problem. And you're going to get a huge tax hike next year if it's not extended. To assume then your revenue share of GDP is going to go up, I think, is totally misplaced. So there's a lot of things that are going on, but I think the scoring has been woefully inadequate. But again, Tom, until we see what's in these bills, I'm just speculating. I want to see actually what happens, then I'll make a judgment call at that point.
The most recent University of Michigan survey was disappointing to the marketplace in the sense that it reflected slower growth outlook and higher inflation outlook. How concerned are you about inflation moving higher, whether it's driven by tariffs or not? What is your inflation call?
So the inflation, what I am optimistic is you are seeing money supply, and it's hard to measure totally broad credit creation. A lot of credit now is outside the public markets or in the private credit markets. Yep. M2 growth has slowed. You are seeing wage growth moderate, although I'm not a big proponent that wages drive inflation. Gas prices are dropping in some parts of the country. The energy side, to me, is is going to be very important. And if the administration is successful, and I think they will be, but they need, one of my assumptions, they need gasoline and oil prices down, because you could lose about a point on inflation headline and core if oil goes back to 60 or slightly below. So we need that. So that's how I see things shaping up.
What do you say to people who say tariffs are a tax on the consumer?
So what I would say is when you go through just the simple math of what President Trump had said last year, 10% across the board, 60% on China, you got like a 9/10 increase in the price level, assuming everything was passed through, which history suggests it's not. Some will be absorbed in the margin, some will be absorbed in the exchange rate. But I would say to people, look, if you're having to pay a one-off higher price for a good, but if you're a blue-collar worker, you have no tax on tips, no tax on overtime, which, by the way, those are supply-side factors, and you're paying no tax on Social Security benefits, and we're also having the benefit of low marginal rates and low corporate rates. That, to me, is a great trade-off, because ultimately, in my opinion, it will drive long-term productivity growth through capital expenditure.
Thank you so much out on YouTube for this idea of what our government does, and I adored him. Admiral Zumwalt was one of my heroes a million years ago. So we spent $24 billion or whatever, $9 billion of research costs on the Zumwalt destroyer. We went from X amount down to 7. It cost so much, it was a failure. Now we're back to Arleigh Burke. I think Stavridis would say that's a good thing. Only 14% of the budget is controllable. What would be the proper response of the parties against President Trump? Do you see a cogent response to the Trump economics?
I'm not sure. Are you asking a question on the spending? I'm confused on the question.
It could be either. I'm confused on the moment as well. The confusion here is I don't see a cogent debate about our fiscal policy over into what it means for our family's investment policies as well. Where's this debate in 3 months or 6 months?
So let me just sidetrack for a minute. Let's just talk about Trumponomics. So what I see is, this isn't exactly what you asked, but at least we'll talk about the economic policy, is what I see is a desire and intent to re-engineer, reindustrialize the U.S. manufacturing base. And a tariff is a necessary but not sufficient criterion to try to do that.
Fair.
In addition to low corporate rates on domestic production, cheap and abundant energy, because it's very key to produce things. Germany isn't cost efficient anymore. If you exclude the pandemic production, their industrial production is back to what it was in 2010. Right. And then, of course, you need business-friendly regulation. Permitting process, I think, needs to change a bit. Even I think the other side can agree on that. So that would kind of encourage capital to come into the U.S. On the fiscal side, Tom, which you raised, which is very interesting, we need to have that debate. But I don't think we've ever realized how much spending we just waste. And people talk about, it's all entitlements, and that's where the money is, 30% discretionary. But there is a lot of waste and abuse, even on some of these entitlement programs. But people, unfortunately, conflate getting rid of the abuse with, people are losing their service. And that's not the case. But we don't have that debate, and we should.
We have a debate here that we haven't talked about basic economics. Where does SMBC Nikko see the unemployment rate going, given all this?
We've got the rate essentially in the low 4s, 4 to 4.25. So we think it'll stay pretty low.
It's going to stay there.
Yeah, well, it's 4.1 now, and I would say
that's an outlier call, I would suggest.
To tell you the truth, that doesn't surprise us. We tend not to look at other economists, in part because we don't want to be biased. But to get a higher rate, Tom, we'd have to be really pessimistic on growth. Also, too, Okun's law is useful, which is, you know what Okun's law is, but it's the relationship between potential GDP and what actually happens in the economy. And the other thing is this, is that even if we had a slow period of growth this year, maybe you talked earlier about the pain. Yes, we're going to have somewhat of a pullback on the fiscal side. Secretary Bessent mentioned detox. But if all of a sudden it looks like 2026 is going to accelerate, financial conditions will ease in anticipation of that. Hopefully there'll be some clarity on the tax side, and companies wouldn't lay people off. So there'd be no reason for the unemployment rate to rise if the 12-month forward was improving.